just go on one. If you can't see video on Zoom, just go to YouTube. It's perfectly fine over there. And it's also being recorded, so don't need to worry about that. Perfect. So when we're talking about volume, you need to understand when there's going to be volume in the market, right? So there are some times when there's going to be volume in the market. So the first is when markets open. Whenever markets open, there's going to be a lot of volume in the market. Whenever markets close, there's going to be volume in the market. So when we talk about market opens, we basically talk about that, okay, maybe there's going to be a lot of volume at New York Open. There's going to be a lot of volume at London Open or Asian Open, which is why some people say, oh, hey, like, you know what, I only trade the market opens. And you ask them why, and then say, well, the reason is because there's a lot of volume at that time. When there's volume, you have bigger candles. And when you are in trades, you need bigger candles to run your trades. So that's why we focus on market opens, market close. There are news events. News events also have a lot of volume, right? Next you have breaking news. Breaking news also have a lot of volume, now, and next we have speeches, etc. So when we're talking about news events, it's not necessary that you should be trading news events because it's very risky. There's a lot of volume. They're like very volatile. So we're going to talk about volatility here in a second here, but trading news is a big no-no. This is basically programmed in Forex Factory. When you have breaking news is news which is not programmed, which is not expected to be released, which just comes out of nowhere. Like if someone talks about OPEC, or if Trump talks about something very controversial that may move the economy, or if you have, I know, in 2018 and 19, we used to have a lot of breaking news on Brexit. So those were unplanned news. So those news events also bring a lot of volume in the market. So the best time to trade is when there's volume in the market. And the best time when there's volume in the market is basically when the markets open, when markets close. Especially one thing is missing here, the London and New York overlap. There's going to be a lot of volume in London and New York overlap as well, which we talked about in market sessions. Next, we have volatility. Right? Volatility is defined by the uncertainty in the markets. This means that it's really tough to know which way the market will move, right? Whenever there's a lot of volatility, it's like during this time, you may notice candles move haphazardly on the charts, which is a sign to stay away till the market calms down. What this basically means is, now, sometimes, when you have news events, like you have NFP, whenever you have NFP or interest rates, or let's say you have FOMC, you see that the candles, they break highs and lows of the previous candles. Like the candles move up and down. That's a lot of volatility in the market. That means that the price does not know where to go. There's a lot of volume, but it's very volatile. Volatile means it's very unstable. We don't know where it's going to move. When you have market open and when there's volume in the market, you see that the candles will make higher highs and higher lows, like we talked about earlier, and they will make lower lows and lower highs if the trend is going down, which we also talked about earlier. But when there's volatility involved, you see that the candles just start breaking the highs and lows. It starts acting in a very haphazard manner. So when there's a lot of volatility, it's very difficult to trade. And volatility comes when there are a lot of high impact news. You have dead market hours. Sometimes when it's the afternoon session when it's late in the Asian session, you might see some volatile market. Like there might be something happening in the background that may move price here and there, like with a lot of volatility. So it's very difficult to trade at that time. Sometimes, I know at London Open, when London opens, there's also some sort of volatility where candles, they throw wicks up and down, and that's very difficult to trade as well. And then, I remember in the past 1 to 2 years, we had Trump tweets. Trump tweets was also causing a lot of volatility. Sudden change in economy also causes a lot of volatility. So these are the things that you have to be very careful about. I remember in 2017 and 2018, Kim Jong-un used to drop bombs, like he used to test bombs in the Asian session, and that would cause a lot of volatility in the Asian session. Asian session will move a lot, but there would be a lot of volatility mixed with a lot of volume as well. So it would get really hard to trade. So I would say whenever you're trying to trade and you see that there's high impact news, coming on, like, maybe in half an hour or 15 minutes, it's a great idea to just stay away from the charts because we don't know where the volatility is going to go. Of course, we're going to have volume, right? We're going to have volume to trade, but when there's going to be volatility, we won't know where price is most likely to go, right? So let's talk about momentum. Momentum is the byproduct of volume and volatility in the market. Without any surge of volume, price cannot be in momentum, right? This is very important. You need to have volume in the market. You need to have volume in the candles in order to have momentum, right? You cannot see momentum in the market. You can feel it with experience. With momentum, you expect certain things to happen in the market, such as break off support resistance zones. Like, if price is approaching some sort of a zone, then okay, there's a lot of volume in the market, and now price is most likely to approach that certain zone. So when you see prices moving towards a certain zone, now we're going to talk about this momentum and volume later on in a lot of examples we have. So when price is moving towards a certain zone, you know that it's moving because there's volume in the market, and that movement is defined as momentum. You see it, you see, okay, man, like, look, there's a lot of volume in the market, price is in momentum, which means it's on its way to a certain zone, right? And the only reason when your support and resistance zones are broken, when there's a lot of volume in the market as well. Because for your 1 hour, 30-minute, and a 4-hour zones to break, price needs a lot of volume in the market. It needs a lot of force. It's like when you're trying to break down a wall with a hammer. You need a lot of force applied on the wall to break it down. It's the same thing here. When you have dead market hours, let's say when there's no volume, support and resistances, they may not break. Like the minor ones, the 15 minutes, sometimes the 30 minutes, they may not break. So you need time when there's a lot of volume in the market. So, like you have trend changes when there's a lot of momentum, you might see some trend changes happen. You might see formation of larger candles as well. When are larger candles formed? When there's a lot of volume in the market. So that's what you need to see that, okay, if you're going to try to trade, what time are you trying to trade? Are you trying to trade when there's going to be volume in the market, which is when you will get larger candles, and those are going to be your trading candles. At the same time, like we talked about, as price is approaching, let's say, a support, you know that there's almost like 20, 30 pips left for price to approach a support. You look at the time, you're like, okay, this time there's going to be a lot of volume in the market, and there's also a lot of momentum. So price may reach that support because it's in momentum. It's in momentum because there's a lot of volume in the market. Why? Because maybe it's the New York Open, or it's the London Open, or it's the London Close, or it's the Asian Open, or we just had the news and price just wants to move along. So these things are very important when you're looking at, like momentum, volume, and volatility. I just want to make sure, again, my audio is fine, video is fine, my pace is not too fast, not too slow. Okay, everything good? Everything also good. Okay, people in YouTube is also good. Okay, perfect, awesome. Okay, let's move along to the next section here. I think the next section we will have is for a little bit technicals. This is going to be